Let's get analysis from Michelle Schneider, partner and director of trading research and education at MarketGauge.com, and Boom Bust co-host Christy I. Thanks for being with me. Michelle, let's start with you. What do you make of this meme stock trading? Is this going to become the new normal for the market, do you think?
Well, it certainly has become the new normal over the last year. And yes, it may be hard to justify the valuations for a stock like AMC or GameStop, but AMC actually had some real news in that they were able to actually sell $230 million worth of stock to an investment firm. So they are raising money. Now, I think the bigger problem, though, when you're looking at these is there's still been nothing done with the fact that these hedge funds can go short. They have very little regulation. They can kind of do it under the wire. And they pay very small fines if they actually get caught. And it seems the regulators are kind of helpless and powerless when it comes to all of this. They haven't really been able to do anything about it. So as long as that persists, then I think that, yes, I think this is the new normal, that you have this crowd coming in and they're able to send these stocks flying, not just AMC today and GameStop, but also Pets went crazy as well. So maybe it's the free tub of popcorn that you get with AMC. I don't know.
Maybe it is. AMC, Christy, kind of ballooned to a record market cap here of $33 billion. And this trading frenzy, it's led to, as we mentioned, several trading halts as it surged more than 100%. How's Wall Street feeling about this? And honestly, why shouldn't meme traders be doing this? I mean, if they have the ability to, Wall Street does this kind of thing all the time. Why can't the average Joe do it?
Exactly. There's absolutely no reason why they shouldn't. And right now, Redditors are just getting a kick at sticking it to Wall Street and basically popping all these short sellers. But at the end of the day, it doesn't make any sense because AMC has a market value of about $30 billion, as you said. And the theater has been closed for most of the pandemic. They're expected to lose money this year and next. So most people short the name feel that it's overvalued. And right now, even with the economy reopening, that still doesn't change the fact that the company has about $5 billion in debt and needs to defer about $450 million in lease repayments. So right now, Wall Street has very, very low price targets. Credit Suisse has the target at $1.50. Macquarie has at $5. The most aggressive call comes from Lightjet, who says it's worth about a cent target, citing that movie-going habits have permanently changed, with Hollywood pressuring the theater industry by releasing new movies on streaming services the same day as their theatrical release. So it seems like consumers have actually embraced streaming from homes and are likely to be far more selective in what they have to pay to see in a theater going forward. But all those fundamental reasons on why AMC should be shorted is kind of lost on the Reddit crowd. And as a result, Wall Street bears saw about $1.2 billion in realized and unrealized losses last week. And short positions held since the start of the year would have suffered nearly $6 billion mark to market in losses. So no, right now retail investors, they're having a kick, but I think their time in the sun is going to come to an end because it costs them incrementally more in order to buy additional stock. And the higher the market cap balloons to, the more cash it will take to keep it afloat.
So, Michelle, with this idea that trading gets halted, is this something that happens often, or is this something that's been especially reserved for the meme crowd when they get involved? Because I don't remember hearing this happen very often when Wall Street traders go in heavy on a stock, but all of a sudden when the Reddit crowd does, it's a let's pause everything and make sure that this doesn't interfere with the systems that are already in place.
Well, there are breaker systems in the market, as we know. Certain on big down days, we've seen that happen. We've seen stocks halted in the face of big news coming. So it's not something completely new. Back in the day when I was trading commodities, we would see commodities get halted as well. And then there was a natural limit up or limit down as far as you could go. So this isn't highly unusual. Today, the Robinhood firm was the one that first was rumored to be the reason why it was halted. And then they said, no, it was just to reset with the volatility going crazy. So it's just, I really listened to what Christy said, and yes, it may not be a forever thing, but I do believe that there is now going to be these targeted stocks that get overshorted by firms, and the fundamentals may or may not agree, but like she said, it's true. We're going to see these stocks continue to fly, and it may not necessarily always be the ones that we've seen recently, but I think we can see some new ones emerge. I think cannabis now is a target. Let's watch for Tilray. It went up crazy today. We'll see what happens tomorrow.
And Christy, in terms of this meme stock kind of phenomenon, the meme trading phenomenon, because it's also true of Dogecoin as well, right? It doesn't necessarily have value except for the value that the buyers decide that it has. They're the ones who choose to invest in it. But when we're watching kind of these meme stocks go up, is this a fad, or do you think it's going to kind of redefine the way that markets run based upon how the crowd views it?
I think right now crowd trading is definitely a thing because people have this mentality that they can band together, make money together, stick it to all of the big institutionals. But the problem at the end of the day is still the same because size at the end of the day matters, and the bigger in market cap that Dogecoin or AMC or GameStop. Mind you, when these things first started, all of their market caps were in the millions. They are now in the billions. So the bigger the market cap gets, the more capital it's going to take to keep it propped up or move it forward and keep the rally going. And if you can't keep the rally going, then every single Redditor, every single trader is just going to keep on dropping out because they're going to be like, I'm going to take profit here, I'm going to take profit here. As soon as people start taking profit, that's going to be a domino effect down because it takes incrementally more buyers and more dollars. So it really can't go on forever, and there will be a tipping point that the entire structure will come crashing down, and it's going to come one after the other because the market cap has far surpassed that of GameStop when GameStop had its moment in the spotlight. So retail will feel short on cash soon. But the thing is, unfortunately, there are rumors that of a possible fourth and fifth round of direct stimulus checks. And we've seen these proposals come through. And although they're supposed to be going towards helping the people get food, get their life back in order after COVID, it seems like these stimulus checks are more given into whether it's Dogecoin or Reddit, meme stock, going more towards gambling now. So it's not really having the effect it was intended to have.
Well, that definitely happens. I think a lot of new investors, especially into that crypto space, don't understand the concept of taking profit there. They think everything's diamond hands. Stick with the diamond hands and you'll be safe, but it's not. There are folks who are going to take profit at some point. Boom Bust Christy I and Michelle Schneider of MarketGauge.com. Thank you both for your time.
Thank you.